Okay, so now we're going to get into more into VSA and talking about supply and demand and things beyond our regular technical analysis here. This is giving us a big addition to our edge now that we've gone through our basic common tools, and now we get to our more interesting stuff here. So, starting with a concept, and then we'll get to, as we work our way through particular setups and entries and things that you're looking for to get into trades. But first we want to talk about the concepts and have an understanding of how smart money works, what's moving price, what's behind all this stuff, so we can make sense of it, logical sense of what's happening on the chart, and what smart money is doing. Okay, so the first principle to introduce, and this is a major part of the method here, is higher prices may attract sellers or supply. General principles. Lower prices may attract buyers. So when you've heard with VSA, strength appears in down moves. That's what I'm referring to here. So down move, prices moving down, and strength may appear in that way. And that's typically how smart money enters the market, or pre-positions, or builds positions, or accumulates. That's things we'll get into. So the basic concept is, and we can apply this principle to other markets that may make it easier for you to understand. So for example, common example I use is if you think about the housing market, right? Any market that goes up and down, particularly in cycles, is a good example for this. So if you think about the housing market, how would you profit? You would be buying low and selling high. You'd be buying when prices are low or have gone down or in a downtrend, right, the overall prices. And you would look to buy cheap, and you would look to sell, of course, when prices are higher. So the higher prices would be attracting you to sell, make a profit. Lower prices would be attracting you to buy. Now, what if you did the opposite, and lower prices caused you to sell? Well, generally, you would be counting on the fact that that downtrend would be continuing. And I do trade in that way along with the trend. We're not talking about counter-trend trades all the time. But even during trends, these things occur, pullbacks and retracements. So, to simplify it, again, the concept, buying cheap, buying when prices are low. Again, if you were shopping and there was a sale, prices are lower, it would attract more buyers for that day. If there's a sale for one day, you'd be typically more buyers attracted at a low price. So as price came down, literally the activity of buying and selling, in this case buying, but the overall activity, which is what volume is measuring here, the activity would increase. So price comes down, activity increases as buyers become attractive, because we already know there's sellers, price is coming down. But as activity increases at lower prices, and that tells you that we have buying coming in. And we also have a result, another principle we'll add to it later, which is effort versus result. So that's the first concept. So I think that's a good way to understand it. Again, to use the opposite, to make sure you understand, what would attract you to sell? Well, what if you owned a piece of property? Or what if you owned a collectible, let's say, or an item that eventually went up in value over time? It would attract you to sell it. It would attract more sellers. So if people have an old collectible, I don't know what, baseball card, and something over time creates that it's become more valuable, there comes a point where the higher prices are attracting more and more people to sell that may have not been anywhere near selling in the past, but now that prices have gone up, they're considering selling. Now they're looking to sell. So suddenly it makes sense, right? So now, when you're talking about buying, smart money buying into down moves, price moving down in our chart, showing us that smart money is buying. It sounds backwards, right? But it's the reaction to those lower prices. We're talking about the increase in activity, like I said, that appears at these prices as an indicator they're doing that. And that's only the first piece. So we're starting with that here. And again, there's other things, effort versus result. two candle patterns and reactions to high volume, and we'll get into that. So let's just look at some examples on the chart of this concept. So, and the tools that we've already gone over are going to be worked in, obviously, here. There's a simple resistance. I'm going to look at this day. There's a simple resistance to the left. Very obvious stuff, simple. We can draw a box up to that point over the pin area if we want here. So separating the body from the wick. And so as price is moving up, I want to focus on this day here. This ended up being the highest volume of the day. And you can see that as price went up higher, into higher prices than were previously shown, what happened with the market? It became very active. The activity pretty much doubled from the previous 1 hour. This is the amount of activity, price tick activity per hour. So it pretty much doubled, and that, compared to what had gone on previously so far, and we're just warming up for the day there around London Open. But you can see the highest volume ended up being the highest volume of the day, and in real time, obviously, that would stand out as high volume. And the higher prices is where that high volume occurred. We can also look at just simply on the 1 hour, which is a nice overview, as I say, of your intraday stuff, and then the smaller time frames for the details. And particularly with volume. So looking at this candle on the 1 hour, it moved up initially, right? At one point, it was a big green candle, right? It opened down here because the other one closed here. So it opened down here, it moves up, and at one point it was obviously a big green candle, and it ended up closing around the middle, or just before the middle here, right? About lost 40% or so. So the close of this candle shows us that there was selling into the higher price areas, right? The only way for price to move up and then come back down is that this area attracted some selling. Now, combining the fact that this was into higher ground in this case to clearly illustrate the example of higher prices attracting sellers, seeing the activity increase, and seeing the candle close off the high with a large rejection, pin or wick as it's called, and attracting that sell activity to push it back down, the combination of those things we call weakness. So we're saying smart money is selling into the up move. They are pre-positioning short positions, sell positions, in anticipation of a down move to come. It doesn't mean it's going to be immediate. There's a balance of supply and demand that has to be worked out. We're going to go over this stuff. And when they really tend to pounce and go for the downtrend. In this case, it wasn't until Asia session the next day that it actually really trended. But that ended up being the high. And of course, the selling that came in heavily here, only saw profit and eventually a nice reward the next day. So that's the first example I wanted to show to illustrate that. Give me 1 second here. Okay. So, and we can just go through and see, consistently that high volume and this type of activity is rejecting price and creating swing points. So we take our, is this frozen here? We take our highest volume of this day, and obviously very high compared to the recent range. As price came down, we see a pin. This way, in this case, not huge, but the large volume, the down candle, it tends to be a wider spread. The spread is the length of the candle. And the bullish reaction, which we'll get into talking about the reactions. See, this was a bearish reaction to that. So a bullish reaction as a result, effort versus result. We'll get into that. But again, the principle here, lower prices. As price came down, it attracted eventually a lot of activity. The result of that activity was no lower prices. So we're starting to get into talking about the result. If price had continued down as a result, we could say there's aggressive selling. But again, here we have evidence, factual information that the market became active at a certain point, which did not result in this trend continuing. In fact, it created a support. So there was continuous buying off that level. Okay, so we just see this all over the place. Again, here, this ended up being the highest volume here of the day at the lower price area, creating a support level. It was even a support again the next day. So these are very important levels, right? High volume support resistance. So again here, as the lower prices came in, there came a point where the market became very active, and there was no continuation of that move yet, but there was a support. So more activity, another way to put it, market is coming down, it becomes more active, and as a result of that activity, effort versus result now, as a result of that activity, there's no further low prices. It creates a support level. It stops, otherwise known as stopping volume. So it as a result does not continue the trend. So to get into a little more detail about that, the low of that candle, typically if there's a close below the low, so that's where we started our high volume, and closing in the middle of the candle, which is nice. So if we had continued to move down, it's really closing below the low. So if we had this candle close below the low of the high volume candle where the buyers came in, if we continue to close below, that's a case where we would say officially, if we want to get technical, it's a close below that's going to tell us that the result of that is lower prices. And if anything, you can imagine other scenarios where you have a downtrend and then maybe there's bad news. Well, yeah, it could be a trap, but we'll get into that. But maybe this trend is just finding more sellers. So it could get very active and continue as a result. And you would typically not see a large pin as well. But in this case, again, this low of this candle does not see after that. We do not see a close below. Ideally, a bullish reaction is nice to see, and eventually it came around here. With this candle sort of being neutral and sort of a wait-and-see situation because it's still closed down but not below the low to cancel out the fact that this could be a buy opportunity to go along with smart money buying. Okay. So I don't want to overload with too many concepts. I want to stick to this first one with this video. So again here, and let's start looking at it with the tools that we've already gone over. So we can draw a fib here from a high to low. Now notice, again, I did not draw my fib from this high, right? You would think, why not? It's the high. You should draw a fib from there. But so I found through experience, and you can try this out, and you'll see, drawing it from the top to bottom of the trending move, right? So this is the highest price of the trending move down that we're measuring the retracement of. So this is 50%, right? So 50% of what? This. Not all this stuff, and this, and whatever may have happened back there. So that's a trend. Okay, so it's 9 out of 10 times pretty obvious. If you're not sure, you can draw multiple, and they're going to be very similar anyway, and you can just be aware of them. So that's, again, showing that. Now, you can always draw our box in there and get rid of it, but I'll leave it on there for now. So you see the 618 level there, which is really, again, that point where is this downtrend retracing and looking to continue the trend, or is it really reversing? Is it going to continue to make lower lows and lower highs, or is it maybe going to range or make higher highs? This is a very important level to get that information. So applying that, why does that happen? Because particularly in this zone is where we can say price is going to attract sellers or it's likely to attract sellers, or we can find out if it's going to attract sellers. It's a likely place. Let's find out when price gets there, right? So as we're moving up to there, this looks like it came like 1 pip from the 50 fib there. It's often very, very accurate, touching that 50 fib, and that's where that high volume will come in. And again, we're moving up, and higher prices attracting sellers, potentially in fib areas and resistance areas, to really summarize and simplify it. So, areas of confluence with our technical analysis like we did. So we start to work in volume with that. So here is potentially a resistance area, right, or higher prices coming in that start to attract sellers, possibly. So the volume is what is going to confirm that for us. So on the other hand, we see high volume here, but on the other hand, if price was moving up, this is again a good marker, this retracement, to see, and if volume was low, we would not expect such a good probability that it would reject and continue. So this is the trade setup that you're looking for on these fib retracements, is the high volume. So this high volume signifies to us that smart money is selling to the up move. We can see the large pin. We see the high volume. We see the proper combination here of the wider spread high volume. Not a huge pin, but that's all right, because look at the reaction here. The next candle did real thoroughly test that and was completely rejected. So we get our bearish reaction, a nice two-candle pattern. And again, we also see that we have some very high volume. At that point in time, it was the highest volume of the day, and obviously standing out as high volume off the high price and the 618, the area that we consider high enough to start attracting sellers again that are positioning selling into the up move, like we said. So again, there's evidence of that and the activity increasing without the continuation, but the bearish reaction. So that's a very simple example right there just recently of how the volume, the principles of how smart money operates, technical analysis, simple tools, and working together. And really now you have it all mapped out as far as levels that matter and seeing what smart money is doing at these levels. Here's an example where you see at support, right? Initially there was some buying here. Let's follow the storyline. Now we're getting to the storyline. See some buying here, right? Then we see selling here. Pretty close together. Typically high volume buying and selling is going to occur a little later and further away. But we have all variations and we can still use these tools to read it. So close together we had buying and selling. This does suggest profit taking from this buying for whatever reason. Could it be numbers that came out or some other influence? But it doesn't really matter. We just see that there is selling and weakness here, and obviously that's more recent. And following tracking smart money, that's nice that they bought here, but we see obviously selling here, and that's more recent. Now, continuing the storyline, are buyers going to step in here? Are they going to take profit on this? Is this going to create a range? Because again, they'll be buying here, selling here. Maybe we'll get into a range, right? So what do we see? No high volume. Where's the buyers, right? Are the lower prices, in this case, use our technical tools, is support, and in the previous area where buyers were active, is it attracting buyers this time around? Is it saying that our lower prices are attracting buyers? Principle is happening there. No, because the volume is medium, low, right? So again, the bounce is off high volume, and okay, there was a bounce here, but look what ended up happening. If anything, this was the opportunity where you could still look to sell on a retracement. Maybe not a perfect setup here, but you get the concept. We're following smart money. We're not going to buy. I don't care if it's moving up. I'm not going to buy if I see the latest high volume activity of smart money being selling. There's no way I'm going to buy, period. So again, they have my back when I get into a trade. I know they're doing the same thing. So this bounce, okay, obviously their sell activity lessened. It was apparently a test for buyers. We're going to get into that. And anyone who wanted to commit to a long trade, feel free, because you're going to get run over very shortly. So that's what happened. And you see, again, the fib retracement, 50 EMA acting as resistance. So there's 2 points of technical analysis here, right, guiding us, giving us our map. And again, we have weakness that in the background. Following our storyline, smart money is short, has sold. And there's a big difference between coming down off this level, knowing that they are active there, and bouncing off this level on low volume, saying nobody's really doing much here, and smart money's sitting on these short positions for now. So the last thing we would do is buy, and if anything, higher prices may attract some selling, particularly in the area of confluence. But volume, now is very low through this area, sort of off hours, so you're always going to get that low in between days into Asia open, so there's not much activity. So there's not much you can do with volume a lot of times, unless something really stands out. But in this case, your typical inactivity off hours. But you see, this area held, and it's all tight and clean. Technical analysis is there. notice, just how often these tools, show you things and pop up as being very helpful. Here's an extension of this range, 100%, and that ended up being the low of that move. So, seeing the way all this stuff fits together, these tools together, maybe there would have been strength here and a buy opportunity, but this is a Friday into Monday. This is like Sunday. This is not a time to trade. If I hadn't talked about that, I'll cover that. But, typically you want to avoid certain times, obviously. And I don't think I mentioned that, but I'll make sure to. So in this area, it's not a good time. But point being, we have some confluence, maybe some additional support or something back there, maybe a larger fib zone. And it could be a buy opportunity, also using that extension. Okay. So I think I've pretty thoroughly covered this concept of higher and lower prices may or may not attract those sellers and buyers. Volume being high and the reaction, the trend not continuing but stopping high volume is telling us that it is attracting those trades in the opposite direction of the move. And remember, smart money is a step ahead. That's why they win. That's why people get run over. That's why newbie traders enter a trade and then they go, well, as soon as I enter, it goes against me. It's like a conspiracy. How many times I've heard that? You wouldn't think you would hear that too much, but yeah, you hear it a lot. I entered the trade. I could have entered earlier, whatever, but when I actually did enter, that was it. The trend changed, and it just went right against me, and it's like somebody's watching me or something. It's there's a reason why the majority of traders lose. It's not 50-50. People say it's 90%, 95% of traders are not successful. They're really a step behind. Smart money knows how to work a market. They know how to guide the sheep here and there and take advantage of, pre-positioning long when everyone else is selling and vice versa. Now, it doesn't mean that we're always looking for counter-trend trades, but it means counter-trend trades are there when the volume setup is proper. We'll get more into that. And even when you're going with the trend, you want, at minimum, a low-volume little test for sellers, or what I like ideally during trends, most commonly, is the fib retracements. So you're still, it could be in an uptrend, but you're retracing 50%, and we're looking to buy into that down move again. But as we go further, what we'll see is not just that we're, it's not as simple as I'm making it appear. Well, it's simple in our 1 hour analysis, but from there we need to go to the smaller time frames. If we were looking to sell here or buy here, whatever, in our smaller time frame analysis and additional things that are going to give us the exact entries. So that we're going to get to. So before you get to that, we did the tools. Now we're going to the 1 hour where we start to look at the volume, get our storyline, track smart money, what are they doing, and again, show this principle here to start so we can follow them. And then, we'll get into, then we go to the smaller time frames. We mark this, we do that, and we find our actual entry signal. So that's going to be coming up. Okay, guys. So that wraps that up, and we'll move right on.